Hey guys, welcome back. In today's video, we are talking about how shorts are feeling the pressure, the liquidity exiting, the price to break the shorts, and many more in this video. First, we're taking a look at this. And suddenly on the 7th day, that streak of closure below $1 was broken. Today didn't go short's way and we're gradually climbing back above $1. Now, this was referring to yesterday when we closed at 103, and today we've done even better and closed at 1.12, up 8.74%. And so what we are seeing right now is just a reflection of how AMC should be moving. An 8% move is considered normal for AMC when you understand how much value has been robbed from us, especially when you take a look at how the fundamentals are working for not only the industry, but for AMC as well. You can see AMC closes above $1. Short sellers are feeling the pressure. Do they cover now or risk more upside? And what we are seeing, just going back to yesterday, because we're now closing above this $1, which they tried heavily to prevent us. We saw this happen on the Monday. We saw this happen on Tuesday as well. Literally a price of seconds after the market closed was then pushed to 0.98, and that was the price we closed at. This was their desperate attempt to bring AMC down. But the moment we see AMC close above $1, it seems like this momentum is kicking in. It seems like they can't stop us anymore, or at least they are having difficulties and problems to prevent us from going below $1. And you can see how the liquidity is flowing in for buys, but the liquidity for the short sellers is becoming extremely stressful. The reason for this is obviously very simple. When you talk about AMC going below $1, firstly, no one was selling, or at least the majority wasn't selling. I can't speak for everyone, but I think what I say is the majority of apes were not only not selling, but have actually bought even more shares. Everyone kind of viewed the sub $1 as probably the most discounted area, the most deep value area, and potentially you're never going to see that opportunity again. And so everyone was buying up as much as they can. And this is obviously extremely good because this made sure that the sell volume wasn't insane. And it also meant that people was building up and accumulating an extremely strong foundation. And that's exactly what happened here. And you can see how short sellers are becoming extremely distressed about this. We take a look at someone that I've mentioned in our past videos before, but it's just to talk about the mentality of what short sellers are in right now. You can say maybe it wasn't a good idea to base the short position on a Q1 2026 box office coming nowhere close to Q1 of 2023. Why such hate and anger if you are on the winning side of the trade? So this is from John Hampton. Now, we talked about John Hampton. Essentially, he's a founder of a fund who's infamous for shorting AMC. And you can see the comments he's making where he's saying, I want them to burn. I despise them, talking about us, the apes. He made multiple other comments, which I'm not even sure if I'm allowed to show on YouTube. I'll quickly just show you guys it. You guys can pause the videos and just read what he says, or you can find his tweet and read it for yourself. Go on his profile, not to give him any traffic, but you can see kind of just how angry and spiteful he is. This is for someone who's running a multi-million fund, who's apparently making millions of dollars, and especially someone who's been claiming that he's been profiting extreme amounts on shorting AMC. So he's shorting AMC, supposedly winning because we are seeing the price going down, supposedly covering these short shares, profiting millions of dollars, yet he's making these spiteful comments, yet he's being extremely angry when AMC goes up. Why would you be angry if you're winning a trade? It doesn't make sense. And the only reason to me as of why he's angry is because he is shorting AMC. He realizes that no one is selling, therefore he can't actually cover his short. And he sees that AMC is going up and he's going to lose more money. And that's why he's being angry. We'll talk more about this later on as well. But let's just talk about how liquidity is exiting. We talked about how everyone will try and run to the hills the moment they see AMC recover, the moment they see AMC show any signs of kind of improvement, any signs of momentum. And that's exactly what's happening right now. And you can understand why John Hampton is angry. Because on top of all of this, it looks like he re-entered his short at 170. And because he re-entered his short with the premise that he thought the Q1 box office wasn't going to come close to the 2023 Q1 box office, which we did beat. And this was the reason he wants to buy into it. And so he thought that people were going to sell. He thought that AMC was going to go bankrupt. He thought that the box office was never going to recover. He bet on all of these, and he clearly was wrong on all of this. And this is why he's angry, because his short isn't making any money, because he can't actually cover not only the new short that he's created, but the previous shorts that he also had. And he realizes that right now he can't exit these short positions he's made, and AMC is only going to keep on going up and up and up. And this is ultimately why we know that he is angry and just making these spiteful comments to all of us apes. And so one of the things to note here is that for AMC, it seems like there are a few significant levels already. Firstly, this potential 170 area, where we talked about the short sellers enter in. Now, coincidentally, you can see that the 170 area is during when the dark pool rampage started going up again. We've already talked about this, just to quickly tear out the arm. Essentially, AMC during the 9th and the 12th of January went up 13 and 5% respectively. This was on 60% dark pool. And the moment that all of these happened, AMC dark pool jumped to 80% within a day, and we saw the price crumbling down. And this price level was around 170. And so it looks like this is where he started entering these shorts. And now what we can see is that if we get closer to 170, the positions that he entered is going to go into the red again. Also, another set of short sellers is around the 210, 220 level. And so we have two major levels that are coming in our way. And if we are able to break these levels, you're going to be starting to be seeing a lot of short sellers to be in distress. And of course, the covering of certain short shares. You can see how short sellers are trying to already divert attention. Now, so far report shows 15% of AMC volume today was contributed to price discovery. Now, this is at 12:05 p.m. But it really goes on to talk about how this is the value that was robbed away from us. Is why I said earlier at the start of the video, a 10% move is extremely, or even 9% move is extremely normal for AMC. The reason for this is because there is just enough buys for AMC to go up 9%. And if anything, the shocking part about AMC going up 9% is that it's only gone up 9%. Because the buy volume for AMC is so great every day that 9% should be normal. We should be looking at 10, 15, 20%. The reason why I said this is because in the past, when we haven't seen 80% dark pool, we did see how AMC would go up 13% in the day. We can see AMC going up 40% in a day, but then we were met with 20 holds. But then this is just to showcase why we know that this is a normal movement. Another big reason for this, and it's honestly why people like John Hampton, the short sellers, are panicking, is because we're seeing movies doing it better than ever. Super Mario Galaxy movie has scored the biggest domestic opening day of 2026 with 34.5 million. So for those of you who have watched the movies, comment down below how great you think this movie was. For those of you who haven't, I highly suggest you guys go watch this movie. Now, of course, if you really aren't a fan of it, then feel free to not to, but it is a very, very good film. And this is extremely good as well, because if you take a look at the Q1 box office, like we've talked about, the 2026 Q1 box office has surpassed the 2023, coming in at 1.73 billion. So this marks it as the best Q1 post-COVID. This is what we are looking at right now. And so this is how we are understanding the recovery of the box office, the improvement of the box office. And so just like we've said, even had the Q1 box office been not higher, but the same as 2023, we would have made more revenue and more money than 2023. So it really is a cherry on top that we are seeing the box office go even bigger. And it just goes on to talk about how much AMC is going to make and how much they are going to improve. Now, one of the shocking things to obviously look at is just during these times, we're still facing manipulation. You can see that despite what has happened, when we take a look at what was happening today, the competitors, AMC was actually down at one point, whereas its competitors was up 0.63, 0.73 for Cinemark and IMAX. Now, ultimately, we ended the day above 8.74%, unlike we should. But the very fact that we saw AMC going red at one point and our competitors was already up this much, it already goes on to talk about the manipulation that it's happening. It's normal for certain stocks within the same industry to lag behind one another. Meaning, had Cinemark gone up 5%, but AMC only gone up 3%, that would have been normal. It's not normal when the industry has benefited from the same news and they are all green apart from AMC, which is red. That is extremely not good. And this is to talk about the manipulation. And you can see here about why this is happening. So if we take a look at it here, the off-exchange trading comparison. So this is the off-exchange comparison between AMC, Cinemark, and IMAX. Now, you can already see the extreme difference. For AMC, we're looking at 77.7%, which in fact is actually even higher. For Cinemark, we're looking at 36.3%. And if you want to see how much of the volume, so you can see 31.5 million shares in off-exchange to only 0.63. Now, of course, the shares outstanding is a bit different because Cinemark has less, but already looking at the off-exchange percentage, you should understand how crazy this is. Over half of the movement is gone. We are double Cinemark's dark pool usage. And that's exactly why we see, again, this picture of why Cinemark was up green, yet AMC was down red. This is the very reason. And so to talk about how much value has truly been robbed away from us because of dark pool, it really just goes on to show. Furthermore, if you want to take a look at another example of why AMC is going up, we're seeing the Super Mario Galaxy movie Luma LED popcorn bucket actually being sold out. Now, this is just talking about how well AMC is doing. Their merchandises are being sold out. And that's exactly what we want to see. This is obviously an increase in revenue, an increase in profit. And it also talks about just how much attendance was there. And this isn't the same thing that we're experiencing for Cinemark, for IMAX. This is what we're looking at for AMC right now. And so it's how we understand that people are realizing that AMC is becoming more and more of the best opportunity within the industry, and everyone is trying to get in. You can see also from other places why there's massive effort, money, and energy invested in suppressing AMC year after year. We might know the answer. AMC's survival is a death sentence for someone, and the public SI likely has to do with it. So this is what we have always said. Essentially, AMC is tied up to not just one, in my opinion, but multiple other firms. Now, there are some firms who are more on the edge than others. So in this case, we know that firms like UBS, who had to buy up 6.2% of AMC's float because of the toxic swaps that they held and the margin liquidity problems that they are facing right now, it makes sense why they want to buy AMC. But it also lets us understand that they are the ones that are extremely on the edge. Now, there are also a few other firms who are also affected and will be affected by AMC. And that will be companies like Citadel. That will be companies like Virtue, like John Hampton, like we talked about. These are all people who have the fate of their firm tied up to AMC. And it's why we see this constant suppression. It's why we see this constant dark pool. And now what we can see and potentially believe is the AMC squeeze this spring or summer, because everything is becoming extremely tight right now. Not only are we seeing AMC going for that run up, we're seeing the liquidity problem faced by these short sellers. We're seeing the margin problems faced by the banks. And so all of it is lining up. Also, when you take a look at the technical analysis for AMC, the short-term movement is already showing to upside of 1750 and all the way up to 71. So this is what we've said with so much liquidity, so much volume, and so much data is all showcasing for why AMC is about to pop right now. But you have to understand, during times like this is when the short sellers are going to try and suppress us the most, because they don't want to see AMC go to 1750. We already talked about how even if AMC were to go to $2.10, it will already put extreme pressure on shorts. Think about how much pressure they will face when it goes to 1750. Think about how much money they will have to lose when it goes to 71. So they're going to spend everything they can to suppress AMC. We're also looking at the IWM, where we can be seeing a squeeze of a lifetime because of the shares that are being borrowed and that fact that they're trying to suppress AMC, but how AMC is obviously trumping through all of this. So many signs are showing us what's going on right now. We're also looking at how GME is pushing pressure on these institutions as we see $750 million borrowed. And now this is a insane thing, because it already goes on to talk about how banks, again, going back to what I said earlier, how banks are facing liquidity problems, how banks are facing margin problems, and the reason why they need to borrow money. Another firm that we mentioned earlier, Citadel, you can see why they don't want AMC to go up, because they're already facing problems within themselves. Citadel's global fixed income fund tumbles, sinking 8.2% in March. The losses left the fund down 5.5% for the year. The global fixed income fund, which is smaller than the firm's flagship Wellington pool, sank 4.75% in the first week of March alone. Now, this is going to potentially increase the losses. And I've already talked about this. I said this a month ago. I said the volatility that we are seeing right now, because of everything that's going on, because of the geopolitics, because what we talked about with oil, gold, and silver, the volatility in the market, I've already said these funds aren't using this as their advantage. They are affected more than anyone. And it's only going to be a matter of time until we see an article to see how much they've lost. And this is the article that we are looking at. This is how we know that they are losing money. It doesn't even stop there, because the private credit is also a big problem right now. What we are seeing that once was a lucrative investment, a lucrative yield, is now becoming too big of a problem, where the firm in the middle of this, Blue Out Capital, disclosed that the investors tried to pull 40.7% of one fund and 21.9% of another in a single quarter. But the funds only gave the same answer, which is you can only have 5% back. So 21.9% and 40.7% tried to be pulled out, but each party or each fund only got 5% of that back. So this is just talking about the private credit problem that's also happening and why Wall Street is worried. And so potentially is why we're seeing SEC not talking about transparency whatsoever this year, because potentially they don't want transparency anymore. They want to make sure that the firms doesn't blow up. They want to make sure that the economy doesn't see trillions of dollars being lost because firms fail to comply to the rules, because they are messing with things that they shouldn't. And so that's why they're not talking about transparency potentially. And then finally, HIMC has reported high-grade drill result from Vortex target at Highcroft Mine. So they found higher grades again. So if you want good news about HIMC, about AMC, this is also what we're looking at. As always, none of this is financial advice, and I'll catch you guys next time.